Welcome to lesson number 2 of trading psychology. This whole segment of trading psychology, I broke it down into 4 lessons. This is lesson number 2. The first lesson got a lot of positive response and it seemed to help people a lot. I would like to dive in deeper. So far, this is my favorite lesson. I'm really excited to share with you what I have planned. My name is Selena. I've been trading for over 7 years and recently I started social media to see if I can help traders, people, moms, and anybody that's interested to listen to me, things that I wish I knew myself when I start trading. I'm not here to waste anyone's time. I will try to be as efficient as possible. If you have any questions, please leave it in the comments and then we'll try to get back to you as soon as possible. Master your mind, master your trades. Isn't that easier said than done? Let's dive in and see if we can help. Discipline beats motivation. Very, very true. So when we have the feelings, our decisions are based on emotion decisions. And we feel like poor me, I'm in a bad trade, or poor me, the market went against me. But the rules help you stay consistent. So we don't want to make emotional decisions. We want a more consistency. Your 3% a day, 10% a day will be a lot more bigger at the end of the year than you making a big win and then giving it all back. So why discipline is your edge? It protects your capital. This is your job as a trader, to protect your capital. Keeps you consistent, eliminates emotion. So it's a little bit emotionally easier versus like I follow my rules and the trade did not go my way, but my rules were there, versus try to personally take it as a personal. So the disciplined trader's mindset, I see the plan. I wait patiently. This is a hard one for everybody. We need to tailor the patiently one because we're waiting for our plan to show up. We execute precisely. Precision is really important, but it's very hard because market will pull back against you. And that's why we need to put more money on in our drawdown, because we know a lot of times it goes against you right away and then it goes your way. So the precision, I think every trader is still working on it. Manage the risk, you review and improve. Self-explanatory. Why traders break the rules. So that's where the psychology comes in. Like we know the rules. We all have broken our rules. Why? Wanting to make faster money. You're like, I gotta go. I got things to do. I need to take a trade and I need to meet my goal. That's why I'm really big about not making X amount of dollars a day. If you have that set, that's limitation. Limitation to making more and limitation forcing you to take trades. So I'm not a big about make $250 a day kind of girl. I was like, make your money, how much market gives you, how much your entry gives you, and be happy with the outcome. Boredom is a big one. I see even myself take a lot of trades like 15-20 minutes before the market open because we're bored. I'm already here. I'm already ready to go. So let me just go in and make a quick thing, right? So boredom also is not talked enough. Traders are bored and they just take a trade and then you're sweating. FOMO, it is a big one because if the market, let's say you're a bull and it keeps going, and it's like, okay, I'm going to go in too because everybody else is printing money, and then you go in and then it goes against you. So fear of missing out, and I think social media, it's a little bit guilty of it because we see huge totals, or I have seen people make $70,000 on a trade, or they make, 5,000 times, if it's a prop farms, they make 5,000 times, crazy amount of accounts. Like some, I know they have the 20, 30 accounts, right? So I feel like I'm not missing out, but also FOMO makes you feel like you're not good enough because you see all these big outcomes there and you're like, how come I cannot do this? So it messes with our head. Revenge of a loss, right? So you're like, okay, trade went against me, stopped me out, and it won my way. Well, I want to now get my money. How many times that happened to us? I'll be the first one to raise my hand. Let's say I go in long right here, it goes against me, stops me out, and then it shoots to the moon. So now I want to get my money back. I revenge. Obviously, 7 years later, I tailored that, and revenge after loss. I've been better and better. I'm okay to take a loss, like a big girl. Overconfidence after win. This is not very talked often too, and I'm gonna dive in more. The worst thing that could happen to a new trader is to win big because you're so confident. You feel so untouchable. Well, let me tell you, the market's gonna humble you, right? The truth is never the markets that causes you to lose. It's your mind. The cost of one broken rule. In reality, you had a bad plan. You knew the risk, but emotions took over with all the reasons we talked before. So you plan to risk $100 and then now all these emotions are coming and we actually lose $500. So the $100 we didn't want to accept the loss. So now we in the 500. So professional traders versus emotional traders. You guys know me, I try to stay very positive and only look for positive. So I'm going to get over the negatives first. So emotional trader. What is emotional trader? Follows the feelings, right? You like, oh, the market is open. Oh, people are trading. I want to impulse buy. Impulse sell. Like right now we've been having a lot of big moves and we want to jump in because it's impulses, not calculations. Moves the stops, right? We're like, don't grab my stop. Fights the losses. It's really hard. Today we took a trade. It was a loss. We come out with a plus because we were not fighting. We would just let that price action to work it out. Chases the setup. Over risks. This is a big one. You will never see me trading big size because I'm the most probably boring trader. You're going to see me trading micros. The most micros you're going to see me trading, it's a very, very small, considerably with the standards you see online. And think short term. That's a big one for me because I'm stock background, so I think long term. Always think long term. So let's turn all this negative into a positive. So our approach when we're trading should be follow the plan. We use the stops, we accept the losses, right? We win-win. If they take our stop loss, we win because we protect the capital. If it doesn't go to our stop loss and it goes our way, we win. So we try to put ourselves in win-win situation. Waits for setup. I like reversals, so I have to be very, very patient for market to go one direction before I take a reversal. Manages the risks and thinks long term. There are two traders in the market. Be the professional one, which I think we all are working towards it. This slide makes me very happy. All right. This is a way my brain works, and I was really excited to show this slide. Trading is like going to the gym. One workout, one make you fit, one trade will not make you rich. Consistency win. How many of you, please be honest, said on January 1st, I'm going to start going to the gym. I'm going to eat my proteins based on my body weight. And by February 1st, the gyms are empty. I'm speaking from statistics, right? So did you lose the weight you wanted? Did you accomplish your goals you wanted because you had a one good workout? You lifted heavy. You went for a run. You impulse did a lot of things because you wanted to get something, right? And then you're like, well, I put too much effort. Now I'm burned out and I'm out. I'll start next year. So why consistency is so important? And like I said, I trade very small size because I have consistency and that's how I take my payouts is consistency, not a big size. So consistency beats intensity. Patience builds results. Discipline creates freedom. Progress, not perfection. That's me. I love this one. I love like that. I'm not perfect. Definitely not. And long term is the goal. So we talked about percentages before where I say like, okay, I made 30%, I made 5%, I made 10%. But the same 10% today might mean $200, but the same 10% in 5 years from now will be $2,000 and so on, right? So that's a small little comparison, so I think is cute. More than welcome to pause it and read it. Today's discipline is tomorrow's freedom. Stay consistent. Win long term. This is the vision. This is the consistency, means long term. Creating your trading rules. Everybody has their own setup. Everybody knows what works for your brain. And the rules helps you to stick with your own strategy. Not mine, not somebody else's, but your own. Like, right, so my brain sees reversals. So I created rules for myself. X, Y, and Z has to happen for me to go in. So why rules matter? So remove emotions, we talked about it, creates consistency, protects your capital. I only trade stocks from my watch list. You guys know I put a watch list, right? So you have to be very disciplined and very consistent. And you look for one thing and see what makes your brain happy. Is it shorts? There has a lot of bears in my community. They love shorting and they printing money like there's no tomorrow. I never risk more than that. I don't chase, right? We don't chase. We let it play out. I take profits and I review every trade. So if you've been taking 20 trades a day, you've been a scalper, you go in and out. How can you study that? To me, personally, I don't think you have a plan. To me, personally, I think you're chasing the money. To me, personally, I think you're overtrading. The most I take is 1 to 2 trades max. And the price action works out, then I could study. But if you took 20 plus trades, can you study? I'm going to leave that blank. You can answer that to yourself. You don't rise to the level of your goals, you fall to the level of your system. And your rules are personal. It's like I said, personalized to you. Don't do what I do. Do what makes you understand the markets better. And there's many ways to do it. The power of trading journal. So many ways you can do that. Like I'm visual. I like taking the screenshots and I like marking my charts on the screen chart. That's an easy one. Some people like to take a piece of paper and wrote it down because they said it kind of like tattoos it into your brain. Everybody's different. again, I don't have a suggestion because everybody has to tailor their own trading. But what happens when you journal, you are studying too. You're like, my entry was too early. It was too late. I was chasing. You're analyzing yourself. You're analyzing your thought process while you were doing in the moment, while the market was open, while it was hot, and you made a decision. So by journaling your trade, you're able to go over yourself, your own thought process. And you're explaining to yourself what you did right and what you did wrong. I'm not saying to analyze only your wrong trades. Actually, you should analyze your winning trades. So why did I win? How can I repeat? That it's not even just mistakes. I love analyzing my winning trade so I could see the same pattern again and again. Your journal isn't just a record. It's your roadmap to consistent success. There you go. We're going to level up. Confidence versus overconfidence. I mentioned this in the beginning. My second favorite slide. Let's go over the negatives. So overconfidence, thinking rules don't apply anymore because you got a good winning streak going, right? So you feel untouchable. You're like, I'm going to quit my job. I'm going to retire my whole family. I'm moving to the beach. I'm buying cars already because I'm untouchable. I got this market. This is easy. So what happens with overconfidence, right? You start not being as sharp. You trusting yourself versus actually reanalyzing the market every single day. And then you're like, oh, someone tweeted, that's why I'm in the minus. Or, I went bigger because last time it worked out, right? So it leads to mistakes. And then you focus on what? On your ego, because somehow becomes about you. Because look at me, I did good. Look at me, I did this, right? It becomes about me versus you being humble and thankful and grateful for calculating the right way and not oversizing. I really love this one. And I think we talked about social media. So overconfidence is loud. So there's not much to comment here, right? You see a lot of loud people out there. They're very confident. Let's talk about the positive. Confidence, trusting your system. Based on the preparation, analyze it. I don't like back testing. I'm sorry. I'm not a big back testing kind of girl. It's hard for me to go back in back testing, but I analyze it, my trades that happened today. I put in the work, I study, and I tailor again. Follow the plan. I do that. Accept all the outcomes. Might, have to take a loss on the chin. It's not comfortable, but we protected the capital. Keeps you disciplined. My life is very disciplined. It's very sectioned out. I put in my workout. I put in my cooking for the family, everything. It is very disciplined. And I think it reflects on my performance in the market because I have everything disciplined. I can't imagine you having not a disciplined life. Everything is a mess. Your relationship's a mess. Your room is a mess or your house is a mess. And then you're going to be perfect in trading. I mean, of course, divergence also always exists, but I do think your mind has to be very, very organized, very, very disciplined in order to succeed in this game for a long time. And we talked about it, the long term. Protecting green days. Protecting green days, you lock in the profits and you don't have the greed. We talked extensively last time. Greed is a big way to lose money. So if we made X amount of dollars, like I said, I'm not really big about how much you made today. It's like my level worked out, I'm good, I'm out. The money, it will all start compounding. Money, it's not what really should motivate you. It should motivate you that I did a calculation, I did see the pattern, and I took the execution and it went to my level. So protecting your wins will add up. By giving back, I think it comes from greed. I really do. And the trader's job isn't to make money. A trader's job is to protect money. Protect your capital. Why it matters to stay in the game long. Remember, long term. Every slide says long term. Protecting your profits, right? So you don't want to give back. You don't want to be here. Protecting your mindset. There's two kinds of capitals we're talking. One capital is your capital, financial capital, and the second capital is your mental capital. Like I mentioned before, if you've been taking 20 trades a day, that's exhausting and draining and will keep you so empty. And like when you have to show up the next day or even show up the same day for your family, for your friends, how are you showing up? You emotionally drained. So you have to protect your internal capital too. Right? Markets are really hard and we have to show up at the best for others too. And tomorrow. So protect both. Protect your capital, financial capital, and your inner capital. Protect your future and protect your edge. Because market's changing all the time. You think you have it figured it out and things change. You don't need to hit home runs. I'm a baseball mom. I really like this. You just need to protect your base. That really resonates with me. Emotions, your biggest enemy or ally. So let's go over the negative. The fear leads to missed trades. The greed, over trading, we talked about it. Impatience leads to forcing setups. Anger leads to revenge trading. And hope, you hope that you're going to get out of this losing trade. In the positive, when you calm, like I talked about, you internally calm, everything is set in your life so you can really concentrate and not worry about a lot of things in the back end. It leads to better decision and better executions. No one can be perfect. Of course, we have taken perfect trade, perfect entry, but executions have become better because your mind is more clear. Patience, we can wait. We don't have to rush. You have more confidence because you calm and collected inside, and you have your discipline everywhere in your life, and you accept to emotional balance, mental strength, and you're like, okay, if you made little or a lot, your emotion doesn't change. When you start reacting like, look at me, I made $2,000 today, it doesn't like raise your heart rate and you like want to go brag everybody about it, then that's when you turning into a really good trader. You'll be like, I made X amount of percent, it hit my levels, and you'll be very happy. See, I was the same way happy if I made like $20 a day or if I make $2,000 a day, just because over time the capital builds up. But I'm excited about levels. Like if anybody wants to listen to me, it's like, let me show you reach my level. Like I don't go and say, let me show you I made $2,000 or whatever amount is. I'm not big at sharing amounts. So I'm excited that my calculations and my executions work, not that the money poured in. Right. So once you cross that bridge, when you're not thinking about money, you're thinking you as a trader, as a job, you calculated the move and you went your way and you have pretty perfect entry. That's what should make your brain happy. Awareness is the first step. Control is the next. Mastery is the goal. Again, you don't get paid for how you feel. You get paid for what you do. I think that was on the first lesson too, just a good reminder. Mindset shifts that changes results. So I need to win every trade. The market owns me. No one owns you anything. There's no victim mentality. I predicted the market. No one can. I chase the best setups. I focus on money. We talked about all this negative, but let's talk about positive. I just need to follow my plan. I earned from the market. I reacted. I took the setups. I focused the process, right? And all that. The market rewards discipline, not intelligence. Isn't that crazy? Sometimes you can have really high education people with PhDs and doctors and they can't do it. So it's not necessarily intelligence, it's more discipline. And that's why sometimes you see people that you don't even think they could be, we prejudge them. Doesn't look like this person could be good in the market, but they are very disciplined and they get paid really well. So protecting your mental capital, we can control emotions, meaning your personal life is all good. Everything is checked so you can concentrate on this for however time you want in a day. So you don't have any baggage. You don't bring baggage to the market. You just don't. You can't. You're not going to make good decisions if you bring baggage. If you have baggage, if you have a fight with your husband, if you had a fight with your boyfriend or your girlfriend, whoever your partner is, maybe you don't want to trade today. Don't bring baggage here. Really don't. And you come in humble. And you look for your plan, for your setups, patient, consistent, discipline. It's really hard, you guys. It's really, really hard. Truth bombs. Your biggest challenge isn't the market, it's you. Discipline feels boring, results exciting. The more consistent you are, the luckier you get, right? So mindset won't make you rich overnight, but it will keep you in the game long enough to get there. Last slide. Thank you for making it all the way through. Hopefully you guys found something to take it home and tailor and be better at your own trading journey. So great traders don't look into success. They build it one disciplined decision at a time. So this is for your homework. I would say do trade your journals however you want to do it. You can do it with the app, you can do the screenshots, we can do a piece of paper. Everybody has their own preferences. Follow your plan, check your emotions, don't bring the baggage to the market, track your progress, daily mindset checklist. We talked about it. And final take, what to remember, success starts in your mind. Plan gives you power. Control what you can. Small choices, big results. Be a student I'm always a student. Even though I'm trying to share with people and share what I know, but I'm still a student. I learn a lot from my own students. They teach me too. I'm always going to be a student. So much to learn. Trading is a marathon, not a sprint. Protect your mind, protect your money. You don't want to burn out. It's really hard, so you don't want to burn out. I hope that was enough information. I hope you took something from here. I really appreciate you making it through this whole video, and I'll see you on lesson 3. Have a wonderful day.